Okay, you're with us here on Midcap Radar. The market's taken a bit of a leg down, 23 points lower, 11,561 is what we have at this point, 27 now. So it's coming up, but it's a sharp vertical fall, and it's almost a repetition of what we saw yesterday. Yesterday as well at 130, 135 is when that sell-off started in right earnest, and then of course it picked up momentum in the next 2 hours or so. But it started now, so. I mean, something to be said about the 130 effect, but that's what we have right now. 0.5% down on the Bank Nifty. The Nifty is down 27. And I guess, a lot of the banks would be coming under pressure. The private banks, of course, have got the most weight, and they'd make the most amount of impact. Let's just quickly put up the what's moving the Nifty graphic up, and it'll give you a bird's eye view of what's going on. But we won't tell you what has changed in the last 5 minutes. It's just we'll tell you what's pushing the Nifty up and down. Infi, ICICI Bank, Axis Bank are the top 3 contributors on the downside, and between them, that's about 25 odd points or so. Yeah, so it's a couple of banks and Infi, which is going to be reporting numbers tomorrow. Samir, afternoon.
Hi, Prashant. Good afternoon to you. And, it's also the Nifty Bank weekly options expiry today. So perhaps something on account of that. And, as well, global cues have been weak. And, we've seen a big underperformance come through in Asia. So I'm not taking away from the sharp sudden fall that we've seen, but we're relatively better off compared to Asia, but worse off if you compare it, to some of the frontline European markets. Okay, so now even the DAX and FTSE have accelerated and are seeing about a 0.5% fall. So this is pretty much in line. Crude is, of course, remaining at elevated levels. And like Prashant said, it looks like, at least as of now, that the weakness is coming through from IT as well as some of the banking names that are seeing big falls. Add to it something like an ONGC, etc. So you get, pretty much the list of stocks which are taking a hit. But let's take you through what we're seeing in the market. These are our top stories. Sharp sudden fall in the market. It slips to about 0.25% lower on frontline indices on weak global cues and elevated oil prices. Metal stocks, IT biggies and banks drag. HDFC Bank alone fights for the bulls. Midcap index trades in line.
Jet Airways in focus. CNBC-TV18 learns that lenders have received 4 expressions of interest as of last night. The deadline has been extended for the EOIs to the 12th of April. It was 10th earlier. SpiceJet surges on reports that the airline is looking at leasing between 10 and 12 deregistered planes of Jet Airways.
Bharti Airtel gains post a CNBC-TV18 report that the company, along with Warburg Pincus and Singtel, is looking to buy the promoter's stake in Dish TV. The acquisition would help Bharti strengthen its home broadband play to fight Jio.
TCS and Infosys are lower ahead of the fourth quarter earnings. That is tomorrow. Street expects a steady quarter. Margins could be under pressure due to rupee appreciation and some supply side challenges.
And it's a big day for the world's largest democracy as India gets set to elect its next government. Nearly 1.7 lakh polling booths, 20 states and union territories, 91 constituencies and about 1,300 candidates almost. India votes today in the first phase of the 2019 Lok Sabha election.
Okay, Ashwini Gujral is with us to run us through what he's making of things. And Ashwini, the pressure showing through once again right about now. What would be your assessment?
See, it's not really pressure. It is basically, up and down type movement. So each time you get closer to support, you start to find buying. And each time we get closer to, say, 11,600, we start to find selling. But, the intensity is not as much. And as a disclosure, I have just accumulated Nifty positions. And I did that in the morning, and that has worked. My sense is that by the end of the day, you could again have Nifty closer to 11,600 thereabouts, because for 2 days there's been fairly relentless selling. So my sense is that if you buy right now, the risk reward is probably in your favor. Having said that, individual stocks, HDFC Bank is a buy with a stop of 22.45, target of 2300. DHFL is a buy with a stop of 169, target of 183. And Ashok Leyland is a buy with a stop of 90, target of 102.
Okay, Ashwini, thanks very much for that. We should also be getting in some visuals of Sonia Gandhi getting ready to file her nomination papers. Okay, maybe we'll just get to that in a bit. For now, there's a quick Network 18 initiative that has come through. 90 crore voters have the power to choose a government that they want, elect 542 representatives who will speak up for them in Parliament and help drive the country forward. But even 70 years down the line, India has never had 100% voting. Almost a third of the eligible voters don't vote. Can we have 25, 30 crore Indians not voting? News 18 has taken it upon itself to reach out to its audience of nearly 70 crore viewers to encourage them to vote. It is our country, it's our duty. Button dabao, desh banao. Well, the first phase of Lok Sabha elections is here. After months of campaigning by political parties, it's over to the voters now. But we learned that Maruti Suzuki's chairman R.C. Bhargava found his name missing from the list this morning. And he's not alone. We also spoke with Shobna Kamaneni earlier this morning, and there would be many others as well who might be facing this problem. Mr. R.C. Bhargava now joins us on the line to take us through his experience. Hi, Mr. Bhargav. Good afternoon. Thanks for speaking with us. So is it correct to assume that you had checked your name in the voters' ID list online, and then when you went to the polling station, you found your name missing?
No, it's not quite like that. I have an election card issued by the Electoral Commission. I had voted in the 2017 Assembly elections. I hadn't got a slip. It's sent to me sometimes by the polling agent, but I went to the polling station thinking that since I have an election card, I would automatically get to vote. When I went there, I found my name was on the list, but across it, somebody had stamped deleted. And that really meant that I could not vote. So my real question is that how do names get deleted? The process of informing the place where the person lives that your name has been deleted for this reason. There should be some process for it. Otherwise, it can become quite arbitrary.
Mr. Bhargav, were you told there's any recourse? Could you, or they said, well, nothing could be done?
No, there is no recourse. You can't vote, period.
Mm-hmm. That is unfortunate, absolutely. Okay, so I mean, you're not able to vote in this particular phase. We got actually feedback from other corporate corporate leaders as well, and some of whom could not vote. And I think we had a person earlier on join us to run us through what her experience was. Mr. Bhargav, since I have you on air, just a quick two questions on the industry itself. We had the Federation of Auto Dealers yesterday on the channel, and they said that the month of March has actually seen some uptick, as compared to the month of April is seeing some uptick as compared to the month of March, and March was a little better than February. So they were pointing to some inventory correction done from OEMs, although the end retail demand hasn't really picked up. I just wanted to put that to you, sir. What's happening on the ground?
Well, as far as I know, so far the demand has not really picked up. And the wholesale figures which you see and happening, they don't really reflect the actual demand, because actual demand is the retail sales. And so far the retail sales have not picked up. Personally, I don't think they will pick up till after the elections.
So this, the Navratri period also in North India, there has been no sort of uptick at all?
I don't know. I mean, this is Navratris are going on.
Right. So it's for
what is happening in this period, I don't have any idea.
But would you say, as Fada told us, that the system, channel, inventory, etc., has been corrected from the mostly from the OEM side, not because end sales have picked up?
We don't have that inventory to correct to any great extent anyway. But we have reduced our factory inventory to quite low levels. That is why production in March was reduced.
Right.
And dealers' inventories at the end of March were about 3 weeks.
Right. At the end of March, were about 3 weeks.
Yeah.
The production cuts are still in effect, sir?
No. Production each month is planned according to what is likely to be the sale.
Right.
So this year, we are not at all clear. We probably have a range of growth figures starting from a low base to a higher amount. It could happen if the market picks up much better than what is expected today. But that is something which we will see as we go along.
Right. No, I was just saying that for the month of April, the cuts that you had implemented for the month of March, are they on? As you said, you take a call depending on the demand situation.
No. The cuts are being talked about in relation to the previous year's same month.
Right.
But that's not how we look upon it. And each month we put a sales target, a production target based on what the likely demand is going to be. So whether that is less or more than what happened 12 months ago is not really what we work on.
So has your assessment changed for the month of April? No, it hasn't, right? I mean, as you began by saying.
No, we have an assessment for what will be the demand for April.
Right.
And the production will be according to that. So there's no point producing more than what the dealers are going to buy in that month. There's no use building inventory.
Correct. No, I was just saying, so March, your production was 126,000 vehicles, which was down about 27% from the year ago.
Yeah, but April figures, what we will produce, I don't know at the moment.
Okay, all right. So there was also recently a few news reports talking about how the discounting in the market, you're able to sort of roll some of that back. Can you talk about that?
Discounting is something that's better talked of with the marketing heads.
Okay.
Because it's something which keeps changing all the time. Depends on market conditions.
Okay.
I mean, there's no set policy on that this month we will give this much we will give this much. It isn't like that.
Right.
It depends exactly on what the market conditions are.
Right. Fair enough. Mr. Bhargav, we'll leave it there. Thank you very much for joining us. Appreciate you taking the time and speaking with us here on CNBC-TV18. So that is the Maruti management. With a brief sort of overlay of what's happening as far as the demand picture is concerned. And Mr. Bhargav saying that he's not seen any big sort of pickup of any sort on the end market side, the retail level. Wholesale and the system channel inventory may have come down. He said at the end of March, the inventory was between 2 to 3 weeks, 3 weeks or so on an average. And that may have continued into April as well. So those are comments which are coming in. I think the stock saw a bit of an uptick, but it's come off once again.
So for now, holding on with a cut of about 0.25% on the frontline indices, the Nifty Bank down about 0.4%. But let's get straight away to our new series, Election and Market, where we've been analysing various sectors and how they've performed over the last 5 years. My colleague Rima is here now to tell us what has been the fate of the telecom sector in the last 5 years. Rima.
Well, for one, bear in mind the sector is not that much governed by the government, but rather it's dependent on the regulator, TRAI. So here's just a look back at how the last 10 years have been for the sector. Under UPA2, there were two key highlights. One, that for the first time ever, spectrum auctions were conducted in 2020. And number two, the Supreme Court had cancelled 122 licenses, forcing many players to exit. In the last 5 years, the biggest disruption wasn't an account of any policy. It was an account of the entry of Reliance Jio. Voice calls became free, data rates dropped, and then consolidation was forced on many companies, and Vodafone and Idea were pushed into a merger. Now, the NDA government's emphasis was sorely on Digital India. Their financial payment platform, UPI, was a big success. BharatNet project is still limping. A vision document called the National Telecom Policy was released in 2018. It envisages a $100 billion investment by 2022, rationalization of levies. The government also provided some financial relief to the players by extending the spectrum repayment timelines, and they allowed for spectrum trading and sharing. Where both the governments, UPA2 and the NDA, fell short. One, high-priced auctions continued, and secondly, PSU telecoms like MTNL as well as BSNL continued to struggle. Now, putting all this in terms of numbers, the sunrise sector seems to have stagnated. So revenue in the last 5 years, in fact, just hovered around that 1.5 lakh crore mark, in fact, dipping a tad bit. If you look at the total wireless growth, every year we saw about 4.5 to 5% increase in the wireless subscriber. But where there was a big jump was the number of internet subscribers jumping to 49 crore subscribers, courtesy the cheap data plans. Rural penetration increased only marginally to 44%, and average revenue per user, the metric, has now dropped to double digits. The problem for the sector has also been the ballooning debt. From a debt of 82,000 crore at the end of FY19, it now stands a massive 7.6 lakh crore rupees. Massive fundraise is undertaken by the incumbents to bring down the industry debt levels, but perhaps will it be enough, especially because you have 5G auctions which lie ahead. A quick stock check then. Incumbents have underperformed. Airtel as a stock was flat. Vodafone Idea has seen its value erode by 26% annually in the last 5 years, while Reliance Jio's aggressive plans were rewarded, with RIL as a stock outperforming the Nifty. Back to you.
Hey, Rima, thank you very much for that. Well, we spoke with a couple of top industry experts on the state of the telecom sector in the country right now. Listen in.
The present government has done a number of things that have contributed, if you will, to the progress of the industry. So I think the whole issue of spectrum sharing, spectrum trading, the right-of-way, various other duty issues that were ameliorated. So I think the present government has done a number of things that really have addressed the concerns of the industry. I think we have done more damage to ourselves in terms of the bruising telecom war, in terms of tariffs that have gone on. And I think our concerns were more with the regulator than with the government policy making. Stop double taxing us. In the old regime, before the auction process of spectrum, you had revenue share. When auction process started and you started paying for spectrum upfront, you should have removed the legacy revenue share. Unfortunately, the industry is saddled with both. So you have the upfront payments for spectrum, the continuing extraction of revenue through revenue share, and so now over 30% of every rupee that comes to the industry goes back to the government. And I think that is one area that the government could clearly address to get the industry back on its feet.
It's all going to now about spectrum pricing. So ROE of Bharti in 2009 was 30%. Now it's low single digits. So you have to get the spectrum pricing correct. You cannot have spectrum which is priced 15 times versus Korea and your data tariffs at the lowest in the world. So that has to change.
Okay, some opinion there. Spectrum pricing is an old issue, and some of it, of course, has been corrected, but demanding that it be further brought down. Well, we move on to the big story, which is essentially elections. First phase of polling is on as we speak across the length and breadth of the country. We spoke with some top mutual fund managers and some money managers to sort of tell us what they are making of the market positioning going into the elections and, of course, the election results, which is still some time away. My colleagues Anuj and Sonia spoke to some of the top managers. Listen in, and we'll see you after a quick break.
If you look at the history over the last 25 years, since 1991 when we started the liberalization, India has been growing at 7%. You add so far the inflation has been higher and nominal GDP growth of 12-13%. Corporate profits have grown at 14-15%, and market has delivered exactly the same return, around 15 or 16%.
Last 3 terms, we have had varied, I would say, results from the elections. ultimately on the day of the election results, markets have swung very widely. But over a period of 2, 3, 5 years, I think the returns are just mirroring the GDP growth. So yes, on the day of the elections, depending on what surprises the elections throw up, there's going to be definitely a knee-jerk reaction. But I think history has proven over the last 9, 10 terms that the markets are, behaving in sync with what the GDP growth is. Over a period of time, you have to take into account a 7, 8% GDP growth, a 4% nominal growth. So the broad markets to grow at 11, 12%. This has been a period of a lot of issues which were pending to be done, having been done. So, whether it was GST or whether it was increase in tax compliance, I think these are all near-term deterrents for growth. I think the banking issue was, I would say, the biggest issue which was stalling growth, because suddenly, banks had no capital. So first the old problems had to be resolved, and last 2, 3 years has gone into resolving that problem.
If there is systematic liquidity surplus, markets will be liquid. If the systematic liquidity is deficiency, then markets will be liquid. Your FX interventions, your currency in circulation increase takes away liquidity. That is compensated by open market operations. Now, if that amount is negative, the markets will be illiquid because there is no systematic liquidity.